Hello, welcome traders. It is Tuesday, April 30th, 2024, last day of the month, end of the month here. So we are 4 months in. A year is flying by. So we're 4 months into trading and all is going well so far. We had a good month up for the month. So we've had all 4 winning months so far. Good for us. Let's look and see what's going on in the markets, and then we're going to jump into the account. Before we do that too, I just want to talk on trading plans and putting your plans together. It's already April. If your plan's not in place, you got to get something put into place. You have to have a plan to trade by. But the two things that I think are going to really stand out for you, and we did this in our small group training sessions today. We talked about this a bit. But number one is consistency. You have to become a consistent trader. Okay? You can't just be willy-nilly putting trades on everywhere. Hey, over here, this guy's doing this. I think I'll do that for a while. This guy over here, he's trading a 112. He's trading a 1122. He's trading a 116754. Over here. This guy's scalping NASDAQ. This guy's scalping ES. This guy's day trading SPY. This guy's trading SPX 0DTE. Okay. You can't just keep picking all kinds of different trades. You know what? This week I'm going to be doing credit spreads on tech stocks, but you know what? It didn't work well this week, so I'm going to go back and try some. You have to be consistent. You got to keep putting trades on a consistent basis if you want to be successful. The 5%, 10% that are successful in trading, they've got a plan. They stick to that plan, okay? And they're consistent. They keep putting trades on a consistent basis that meet their plan. They don't take a break for a long time. They don't stop doing something when it's not working a couple times. You got to be consistent, especially if you've got plans that are built on positive expectancy over time. And what is positive expectancy? Well, it's taking the win rate, okay, and then taking the average win and the average losses, putting that into play with the win rate percentage to see over time, if I win 90% of the time and my average win is $2 and my average loss is $400 or whatever it might be, at 90%, does that make me money over time? Well, if it does, then you got to keep putting trades on. You can't stop, okay? And there's 2 types of trading that we do, and it doesn't mean you have to be mutually exclusive to either one of these, okay? The first is campaign trading, okay? I do a little bit of both. So I do campaign trading, and I also do what we call discretionary or opportunity trading or opportunistic trading, either one. As a campaign trader, I'm putting on trades on a consistent basis based upon a set criteria for the trade itself. It's either time or it's profit or it's closing out, stopping out, whatever it might be. The 112 trade, okay? I have a version of the 112 that is longer term, that is a campaign style trade. I'm putting it on religiously every X amount of days, or you know, when the DTE rolls around that I want. Okay? That trade's going on roughly every 2 weeks. I don't care what the market's doing. I don't care if the market's down 90 points today. I don't care if the market's up 90 points tomorrow. I don't try to time my entries. I certainly don't time the naked puts and the put debit spread that goes into it. Okay, you don't know what the market's going to do. You got a 50-50 chance of going up or down every day. You just put the trade on and you let it play out. Okay, because you know over time that trade's successful. Will you run into some losses? Absolutely. Okay, but hopefully you have positive expectancy and you're going to win long term. Okay, another trade of mine, I have a 120-day trade. That's a naked put trade. Don't do that on a lot of different underlyings. There's a reason for that. We don't do a lot of different commodities and stuff with that trade, but that trade is based on a good positive expectancy with the exact setup that I use for entry, okay, which is essentially I'm putting that thing on every month, okay, or when I start it, but I'm also putting it on every time I either stop out or take the profit, I put it on again. Okay? That trade always runs, doesn't matter whether I win or I lose, I put it on as soon as I close a trade. Because I know, I back tested it, I know exactly how that trade is going to perform over years and years and years and years. Up markets, down markets, pandemics, doesn't matter. I know how that trade is going to perform. Okay. Campaign trade. Okay. I have another leap trade, which is one of my favorite trades of all, especially in a PM account. Okay. I've got a leap style trade that I do that goes on every single week. Okay? A specific day of the week as well, not just I put it on Monday this week, but next week Monday was down or an update, so I'll wait till two. No, you don't wait. You don't know what the market's going to do. It goes on a regular interval. Okay, so some are time based, some are DTE based, and some are closing trade based. Okay, campaign trades, put them on. Okay, then you have your discretionary or your opportunistic trades. Those are trades, and we can do it on 112s. We can do that on strangles, credit spreads, put credit spreads, call credit spreads, naked puts, ratio spreads, you name it. Okay, pick the trade. It doesn't really matter. Okay, those trades go on when you see the markets setting up for that particular type of trade. Okay, but again, you have to size all of these trades, campaign or not, they have to be sized the same always. You got to keep your size. You can't size one trade at $5,000 and then the next trade is at $3,000. If the $5,000 one loses and it's a 2x stop, you're going to lose 10 grand. Okay. And if you're only winning 3 grand, you're going to wipe out 3 other trades. Okay. So you've got to size them the same and you've got to stay consistent. So consistency is what's going to make you a better trader. Don't keep chasing the shiny objects. Don't keep bouncing from one YouTuber to the next. Don't even listen to me. I don't care. Okay. Find what fits you. And the 3 things that are going to matter to you is number 1, what's your risk tolerance? Do you want lower risk, higher risk trades? Number 2, what is your goal and your timeline for that goal? I want to make X% by X date, X year. I want to double my money in 4 years, okay, which is 1.5% a month or something. I want to double my money in 3 years, which is 2% a month. I want to double my money in 2 years, which is 3% a month. Okay. Know what your goals are, and then does that match your risk tolerance, okay, on that? And then once you've done that, it's really a matter of figuring out the strategies that fit your trading style. Do you want to be scalping trades all day and sit in front of a computer? Do you want to trade leaps where you trade maybe once every 2 months and put something on it once a month? I have an IRA account I looked at today. Only 3 trades in it this month for an IRA. Sometimes there's only 1 or 2 trades. I put 2 trades on, I take 1 or 2 trades off. That's pretty much it. My small account, same type of thing. Barely trade in that account at all. Okay. In my trading account, I'm a little bit more active. Okay. Because I'm trying to hit 3% a month. That's going to keep me more engaged. I'm going to put more trades on. But is that your style? Okay. Personally, I don't want to sit in front of a computer all day. I don't want to be monitoring what the markets are doing. I frankly don't really care what the markets are doing. I will check in once or twice a day, unless I decide, today I'm going to do some 0 DTE. I have nothing planned. Let's make some trades. I'll do a 0 DTE trade, but never trade because you're bored. Only trade because your plan allows it, your BP allows it, and you're finding trades that make sense for your plan. So I hope this makes sense. But those 3 things, your risk tolerance, your goals, and your trading style or your lifestyle, they all have to fit together. Why are you trading in front of a computer all day if your goal was to retire? Now, maybe you're bored and you don't want to just sit out in a chair by the lake or the pool or whatever, and reading a book. Maybe that's not you. You want to be active in the market. Great. Put a trading account together that allows you to be active. Okay. But it shouldn't be your retirement account. Okay. If on the other hand, you just want to enjoy life and do stuff with the family, you want that financial freedom, then create a trading style and plan that fits that. Okay? 0 DTA is not going to fix that. Scalping trades and active trading, not going to help that at all. Okay? You can't spend time with your family if your trading is based upon being in front of a screen for hours a day. Okay? So understand what you want to do. All right, so that's my quick point to you. Let's take a look at the markets really quickly, and then we'll look at our account on how we ended the month, and we'll wrap it up from there. All right, take a quick look at the markets here. Let's look at ES on the day. A pretty hefty down day on the markets. Overall, I think we were down about 80, 90 points on SPX, on ES as well today. You thought maybe we were getting on the daily here. Look at, we'll zoom in. Bearish weekly, bearish daily, got back up here after this bounce off of the 3 ATR. Okay, you moved yourself back up to the 21. I talked about this yesterday, right at the downtrend line, and failed miserably here today. So pretty hefty, gigantic red candle, one of the worst down days we've seen in the year, maybe. So going back quite a ways. I don't know that we've been down this much in a day before, nearly a 2% down day in the market, at least on ES. Even though MACD has been climbing, RSI has been climbing, the squeeze momentum's been climbing, I still don't know that this is the end of the world, but we certainly failed at the 21 and the 50, and we failed at this downtrend line. So right now, the bearish market is intact. We've now made another lower high. We'll see if we can make a lower low, or do we start to pull out of this tailspin, move out. Right now, bearish looking on ES. So depending on your trading style and what you're doing, okay, does that fit? If we're looking at oil here, it's been in a nice uptrend on the weekly, so bullish weekly, even though you're getting a nice pullback to the 21, still bullish. But over here on the daily, we're in a bearish trend heading lower. We saw a little bit of a triangle action here, which we broke out of decently to the downside today. And not only did we fail to get back to the 21, we broke the 50 to the downside. So this is not a good looking chart on oil for the daily chart, but still in the weekly, we're not bad. So still, I'll consider this a pullback. We'll see if the 21 holds. It's not the worst thing in the world to get a little bit of a breather on oil. A lot of the tension in the Middle East dried up a bit, but I think there's always that possibility. So right now, a little yin and yang. I think a good strangle opportunity, but if we fall too much further, I'll hold off on anything new for a while. All right, bonds. Okay, bonds had a decent sized pullback on the session today. They're up a little bit in the after hours here, but bonds, had a decent size, not quite an engulfing candle, but pretty close to it. Still in a downtrend on the weekly, still in a downtrend on the daily. But really, if you look at this area here, this has been in a bit of a, let's draw a little rectangle around it. Okay, this whole piece here, this value area that we've been in, okay, we've just been stuck in this area now for essentially 3 weeks. So starting week number 3 in this volatility box, as I think Don Kaufman would call it. So in the volatility box here, ZB's in it, okay, but MACD has been improving, RSI has been improving, squeeze has been improving on the daily, the weekly still bearish. Okay, I still like it. So I think this is still a good area to continue to look at here. We'll see if we can get any improvement from the box. All right, gold. Kind of a miserable day on gold today. I noticed a lot of lines on here, mainly because we were putting in some fib levels on the session. Gold, huge couple months, just rocketing up, setting new highs, and then pulling back, not even anywhere near the 21 EMA. So this gold pullback is really not a major deal yet. You've pulled back roughly to the 50 fib level. Okay, that's where we almost bounced off previously, and we pretty much tagged it today. So it's going to really be interesting to see what gold does tomorrow. Do we continue to get some more down to the 618 fib? Now we broke the 21 EMA on the daily, not great. The 50 is still down here. The 618 fib is here. You're at the 50 fib. And then I think you've got support down here around 2,200 or so on gold before we get down to 3 ATR even. So good pullback. Gold's now in a bearish trend on the daily, a bullish trend on the weekly for the most part. And it's nothing to do on gold in here. Copper, pretty good drop today, but considering this run that copper has had, this is not anything to really get too excited about, except for this little bit of a shooting star looking candle today. But this is only one day, 2 days into the month, into the week. So not a great candle here, but we can still pull back all the way down here and still hold the 21 EMA. NASDAQ, though, not as good of a day. This thing almost down 2%. on the day. NASDAQ never even got to this downtrend line and it failed. And so NASDAQ, let's get rid of this on here, completely failed to break above the 21 and the 50 and just tailed off today. Okay, even though the underlying technicals looked a little bit bullish, the weekly bearish is still in trend. So this to me is a bearish trend heading lower on the NASDAQ, and I don't know what's going to save it. Earnings from Amazon and AMD after the bell today are not going to save the market. All right, RTY, if we take a quick look at the Russell, bearish on the weekly, bearish on the daily, tried to break out of this downtrend channel and just failed miserably at the 21 and the 50. Pretty good sized down day today. Internals aren't bad, just like the other two. So you could stop at any point here and turn around. But I don't know where that I don't know where that's going to come from. If we're looking at the after hours trading and what happened today, Apple failed at the downtrend line, failed all the way down to the 21, and it's down fractionally in the after hours trading. Microsoft today, pretty nasty looking candle today. So Microsoft not looking too good. Breaking the 21 on the weekly, 21 broke to 50 here. Microsoft looking absolutely horrific, which is not going to be good for the market overall. And this thing is just flat in the after hours trading. Now, Amazon heading into earnings today, we got a gap way back here. Question is, do we gap fill that? We've been in a bit of a downtrend here, but overall, just a nice uptrend. Bounced off to 21 on the weekly, but then this week, that's not just sideways consolidation for the most part. But this downtrend, we broke it yesterday, finished off our highs, and then today we tailed off, and now it is now dead flat, triple beat on earning, tripled its expectations or tripled its revenue or something like that, or its earnings. Fantastic earnings on Amazon, and it's dead flat in the after hours on great earnings. Okay. I don't know where this thing's going, but it doesn't look too awful great. Here, Meta, the gap down, still the gap fill is very, very, very likely here on this one, this previous gap fill, and then we'll have the gap fill above. We'll figure it out, but Meta not looking too good. 21 heading down to the 50. This thing doesn't look good here. Google, big gap up, and it has sold off hard since that, way overextended here, and now pulling back. We'll see what's happening, but in the after hours, this is pretty much flat as well. NVDA here tried to break out, isn't really getting much momentum, sold off a little bit today, but this thing is getting absolutely crushed in after hours trading. It is down 20 points in after hours trading on the AMD earning. AMD did not come out, they beat earnings, but they did not come out with a really strong looking outlook. It was pretty much just meeting expectations. And you've got NVIDIA here, 20 points down in after hours. It's going to open somewhere around 840 here. We're going to break the 21, be down around the 50 if that holds for tomorrow, as we continue to just wait for earnings on this thing for another week. Tesla down pretty good today. Tesla moving lower. It's also down in the after hours trading. Netflix broke it to the downside of this symmetrical triangle. This thing is down a little bit in the after hours trading. And then let's just look at what AMD did. AMD, which has been holding in there decently, breaking this downtrend. This thing is off significantly in the after hours trading. So you're down to about 146 or so. So this is down, heck, 12 points, almost 8% or so. So AMD not looking good tomorrow. So you've got a couple trades that are built into your overall market structure that you're looking at, and they don't look good. So the tech sector not looking too good. However, on the day today, our account really didn't budge at all. So here's where we ended the day. Now, Delta moved up to about 517. So with the markets dropping significantly today, You would expect delta to rise, and it did, but still 0.11, so we're still very delta neutral. Theta bopped up because we had a little bit of an increase in volatility, about a 6-7% increase in volatility today. 1396, 0.29, totally fine. Our net lick, we dropped $900. That's it. So on a $480,000 account, we dropped $900 today. Would have liked to end the month on a new all-time high, but the new all-time high was set just yesterday, and we're $900 off of that overall. So BP usage did climb up today. So we added some trades in. And of course, that's going to bump our BP along with a little bit of the. I also think yesterday that I think Tasty Trade, again, I'm begging the folks at Tasty Trade, fix the damn platform. It's such a nice, easy to trade platform where half the shit doesn't work. Okay. Your BP is all over the board. Now BP is in 1/1000th of a decimal place. Why do you need that? Yesterday, I know BP was wrong because you didn't go from 46 to 37 to 57. So BP was all messed up yesterday. You can't put on complex trades in one trade. You got to leg in. Yes, supposedly we're fixing that. The analysis tab is a joke. Okay, I love the trading platform. I love the commission fee structure. Okay, I love the guys there. I think they're fantastic. Okay, it's a great trading platform. However, if you want to know anything about your account, you cannot trust any of the numbers here. Okay, I've got hundreds and hundreds and hundreds of members using this. I implore you, Tasty, fix the damn platform and get it to be consistently working right. Okay. And every time I'm doing something different, I get a little error message. Do I want to send that to the devs? Okay. At this point, I don't even know if anyone's looking at these things. I believe things are correct on my net lick. I believe my positions are right, but I think my buying power is completely wacky. And if we tail off here and have a big sell-off, I don't want to be under the impression that I have too much buying power, and you got people out there, not me, that are putting trades on thinking their buying power is plenty of space, and when it really wasn't. Okay. Anyway, sorry about that rant. Let's get back on it. We're sitting at 57%. It's totally fine. So I'm happy with where we are. We're in the 50s right now. I think that's fine overall. ES is back to my #1 holding. Yesterday it dropped to 3 because ES buying power was not correct. We also put a 112 trade and a strangle on ES today. So that took it back up to about 32%, bonds at 18%, oil at 16%, gold at 11%, and then a few of the other trades in there, and then bills sitting at 15% of our account. We managed to book some more profits today. So we ended the month at $7,300 in realized profit, 1.53. Was our 3% goal hit? It was not this month. So 2 months in a row, we didn't really hit our goal for that. We were 8,500 last month, 7,200 this month. We'll see how it goes for this month. However, we're still up nicely for the year because we had 2 big fantastic months. What happened in April, we'll cover this more tomorrow, but we had a ZB 112 that we lost on. We lost on a ratio spread in, I believe, ZB and some others. We had 2 hedge trades come off this month. So yeah, I'm okay with all of that because overall we're up 14% in realized P&L, 14%. Okay, we're way ahead of our 3% monthly goal, and our net lick is up 13% year to date. So we're ahead of our 3% goal. So 2 months where we still haven't had a losing month at all, just not where we wanted to be, but had a couple trades go against us. It's all good. We still had 2 nice months where we generated 8,500, 7,500 in cash, and we were just short of our goals. But overall, we're still in great shape for the year. So we have a good May, and we're back on it. We just need to hit our goals. But we are now doubling the S&P. S&P is up 6% for the year. We're up 14% or 13%, depending on which number you're looking at. Well, let's look at the net lick. We're up double the S&P. So right now we have doubled the S&P's gains for the year, and it's only April. So we've got 2/3 of the year left. All right. Hope this helps you guys get a sense of what we're doing in the account. Account is doing great. We're not exactly on track. We're a little bit ahead of track. We got a little bit to play with here, but we really don't want to slow down anymore. We got to keep it rolling on track. And that's pretty good. So, moral of the story here, stay consistent, have a plan that works for you, make sure your risk tolerance, your goals, and your lifestyle or trading style all match so that you can put a plan together that makes sense for you. If you like this video, give me a thumbs up. I could really use it. Let's see if we can get to 200 thumbs up, 200 likes in this video. If you're watching my stuff, give the likes out there if you're feeling there's some value. If you're not feeling value, why are you watching it to begin with? So I hope you're getting something out of it. We hope to see you guys in trading tomorrow. Expect to be there. Okay. Give us a like, a thumbs up down there. If you're not a subscriber, subscribe to the YouTube channel, see what we're doing. And if you want to get in a little bit more in depth of what we do, come join us in the Discord and follow our trades, our strategies, and our education. It's all about education. It's teaching you how to build your plan, figure out your strategies that fit your style, and then how to become a professional trader, even if this is not your main business goal, because you should be trading as a business, not as a hobby. If you're trading as a hobby, you're just throwing money out there. It's like gambling. Okay, treat it like a business. Have a plan. Work your plan. Okay? You don't have to spend 12 hours in the market. You can spend an hour a day, a half an hour a day. Come up with the right plan that helps you do that. Let us help you do that. All right, everybody, take care. Enjoy a great rest of your evening. Bye-bye.